Hi there, welcome to Kneppy's Answers and Replies. In this video, I'm going to answer hopefully most of your questions that you've left in the comment section in my videos in the past week, or just rant on in any statements you have made, any replies, or any whatever you have left in my comment sections. Hopefully, none of them have been nasty. On occasion, I do get a nasty comment or nasty reply. It's very rare though, once every blue moon. I think way back when I started this channel, someone did complain that I recommended a stock and the share price of this stock went down a fair bit. And I try not to recommend stuff because the whole point of me doing these videos is just to share ideas with you. What you do with those ideas is up to you. I might be bullish on a company, doesn't mean you should be bullish on the same company. Anyway, so let's go back. And I should also mention I'm recording this video at 8:30 a.m. on Saturday, the 6th of April. And I won't be releasing this video until probably about 5 p.m. on the 6th of April. So there's a period of time when I'm recording this video and I'm releasing this video that if you do leave a comment or a question in one of my videos, I won't get to see it. So if you have done that, just leave that comment or that question in this particular video comment section. So let's go back 1 week ago to have a look at the answer and replies comment section from last week. And the first statement is from Grointastic. Actually, a really interesting statement. Cancer drugs have only worked once in history, and that has been never. Now, it's really almost like a paradox. There is no cure for cancer, but cancer is curable or can be curable. So hopefully you've known people who have had cancer and they've lived full, fulfilling lives. Maybe it was like 20 or 30 years ago. But there's also people who get a stage 4 cancer diagnosis, and that I'm pretty sure that is terminal. I'm pretty sure that means it has spread. I'm not a biggest expert on cancer. So in that sense, there is no all-encompassing cure for cancer, but cancer is curable, particularly if you catch it early enough. And a lot of the companies I do follow who are in this space, they're not looking for that cure for cancer. They're looking for better ways to treat cancer. And if we were closed-minded enough, and thankfully we're not as a human or as a species, and if we just thought, oh, the cure for cancer will never be found, we just should give up, and then we would have made progress over the past 20, 30, or 40, even 50 years. And people who now get a cancer diagnosis, more than likely they're going to die. But now a lot of people who get cancer diagnosis live for a long time after that diagnosis. So I think it's very important here to be open-minded, to just don't think or be non-defeatist. So this sort of comment is a really defeatist comment, that cancer drugs have only worked once in history, and that has been never. Thankfully, and I remember reading, and I have not lived this long, but reading newspaper articles from before the Wright brothers flew that flight like that would be impossible, or flying to the moon would be impossible. But thankfully, most humans don't, or a lot of humans don't have that mentality that something is going to be impossible. So I think eventually, I'm not sure when it's going to be, maybe tomorrow or maybe 100 years from now, eventually we will find a cure for cancer. So thank you, Grointastic. Just be a little bit more open-minded, in my opinion. Anyway, Simon PT, this channel is getting better and better. Love the interaction with viewers, answers, and replies. You're welcome. And thank you, Heuristic, for your comment as well. And I'm not going to try to pronounce the top comment there from Saji Fargas. Thanks again. Thank you. And there is one question in this particular video, and that is from Black Top Images. I'd like to hear your opinion on IPH. This is really interesting because last night I was starting my going through the chart process. I go through all the charts during the weekend, looking for interesting charts, and IPH actually popped up. So I'll talk about why IPH popped up. So I just pulled the trigger on a substantial amount in, thinking it was at the low, and has gone up since I bought in. But I feel like I jumped the gun, and now I'm suffering a little bit of regret. So even though it's gone up a bit, you're suffering a little bit of regret. So let's have a look at IPH. Right. By the way, pretty good day on the American markets overnight, just as I expected. And just because I expect something doesn't mean it's going to go that way. Anyway, so this is IPH. So let's have a look at the weekly chart first. I always like to have a look at the weekly chart. And you get a different perspective if you do look at the weekly chart, because the reason why this popped up on my watch list is this goes back to 2017. And you can see the share price for IPH broke above $6 in early 2019 and has stayed above $6 ever since then, except for a brief time at the start of 2021 and right now. And so $6 is a really important support level for this company. Now, I can see the share price has dropped from about $10 down to $6 in the past year and a little bit. So let's have a look at the daily chart. And if you look at the daily chart, the share price of IPH has been a well-defined downtrend for about almost 18 months. This is a well-defined downtrend. The longer-term moving channel, the longer-term moving average channel, which is the shaded area with the blue line in between, which is 150-day moving average. That is an area of weakness or area of resistance, added supply of shares on the market. And that has been true for about a year. So it's gone into that zone about 5 times in that period and has failed to maintain in an uptrend. So we can see that little bit of a short-term uptrend from January through to the end of February. Share price rallied from about $6.30 to $7.20. And as soon as the share price got into that resistance zone or that longer-term moving average channel, share price pulled down. And I think the reason behind that was the company released their half-year results. The market didn't like it, and we did see significant volume coming in. And the share price has fallen straight to $6. Share price on Friday fell below $6, closed at $5.92. Now, this is not necessarily a bad thing. This does not mean that support level has been broken, particularly if we see a nice little rally on Monday. So this could be an instance of just buying a position in IPH, thinking there might be a bounce off the support level at $6. Now, I have played this particular strategy in the past, and it has been almost 100% successful, where I bought on a long-term support level. So more recently, that was Duratec, and I've just taken profits with Duratec. But in these sort of scenarios, I prefer to take like a 10% profit. That has worked well because I'm not sure how much of the bounce there's going to be. There might not be a bounce for IPH. And the reason I say that is there was a possible play with KMD brands not long ago. So there was a long-term support level for this company about 63 cents, and it fell straight through. And then the company released some negative news not long after that. So that's why I sometimes am hesitant about these sort of plays, just because there is potential of a negative announcement. So the company is not that infatuated with this company right now. Low sentiment, so negative sentiment in IPH right now. I haven't looked at the financials. So for instance, dividend yields 5.6, that's not bad. PE ratio 24.5. Now, and nice growth in revenue over the past, that's half year data. So nice growth in revenue over the past 5 years. So revenue of 482 million in the last year, income or profit of 65 million. In the last half year, profit did fall, but revenue rose. So some of the margins did drop. So that could be a bit of concern for the market. So the main thing I'd be doing with IPH is just waiting to see what happened with Monday, and the share price is still in a downtrend. That's the negative thing with this company, and that's why I would not be confident, not have high conviction about share price bouncing. But because this company is profitable, you could be thinking this could be a good value play. That could be, if you definitely have done research on this company and you think this company is going to grow over the next 5 years, this could be a good time to take position in this company if you think it is becoming better value or undervalued. Another thing sometimes I would do is just go to like FinChat or Guru Focus or Ticker. Just have a look at the financial history of the company. So this is just the revenue, total revenue of the company. And this is a beautiful revenue history of the company. Now, this is just revenue. It's not revenue per share, but a really nice growth in revenue over the past 10 years. You could also look at gross margins, that sort of thing. Do they have gross margins? Let's have a look. Yes, gross margins. One things I look for here is gross margins not falling through time. Unfortunately for IPH, gross margins are falling through time. So that's one of the things I would look at is just the financial history of this company. Is this good value right now? Have a look at some of the ratios or valuation ratios. For instance, I'll just get rid of both of these. For instance, maybe the PE ratio. This is the PE ratio history of IPH, and currently it's at about 25 or so. And historically, we have seen at times during the past 10 years, with the PE ratio of this company does drop below 10. The last time it dropped below 10 was back in 2018, went to 16.3. As high, PE ratio has been high as about 40. So it's getting towards the low end of what you might expect for this company. Return on equity is at 15 or just below 15, return on invested capital about 12. So there are indications that this could be a high quality company just by me just looking at a few things right here in front of me. And with the share price drop, maybe there is value in this company. I don't know. I don't know this company all too well. I do know it's IP, lawyers, and I'm not the biggest fan of those sort of companies. But I did do a trade with Quantum Intellectual Property recently, and that company looks like it's going to be bought out. And that was a really good trade. So it's really interesting to see similar companies in the same space, and the charts look completely different. So bought Quantum at $1.06 and sold at $1.62 when there was a takeover bid for the company. I think it was a takeover bid or rumors of a takeover bid. And I'm rambling on a little bit too much because I have quite a few videos to get through. So let's get through to the next video, the technical update video. 10 comments in this one, and someone didn't like the video. How dare you? Okay, so let's start at the bottom. I know it's a long shot, but would you be able to review Pacific Edge? Your thoughts on PEB? Good time to buy. So let's do the same thing with Pacific Edge. Now, the first thing is the chart looks horrible, although maybe share price is sort of leveling off. Yeah. So at this point in time, I probably wouldn't be excited in this company just yet based off the chart. However, the share price is consolidating. It's been consolidating since June. So that could be a good sign moving forward. But if you just look at the long-term chart, it's absolutely horrible. Now, the company did have problems. So let's just have a look at Pacific Edge. Just some of its financials. Market cap of this company. In fact, you can look at the market cap history of this company over the past, say, 3 or 4 years. Market cap of this company has been as high as, is that right? 1.2 billion. Is that right? Now it's down to, that's New Zealand dollars. So this must be a New Zealand-based company. Okay, looks like I put the wrong code in. So PB, Pacific Edge, ASX. Can I get ASX? Doesn't what? I don't know how to do ASX. Anyway, so I don't think we need to care much, but based off this, the market cap of this company has been as high as 1.1 billion New Zealand dollars back in 2021. Suppose the share price has dropped a lot from $1.60 down to 7.8 cents, and the market cap is 63 million. I'm not sure if the company's done any capital raisings, but let's have a look at the financials of this company. Yeah, okay, and we'll have a look at the income statement. How much revenue does this company have? So it's increasing revenue, but it's a fairly low amount of revenue, $26 million of revenue in the past, well, the trailing 12 months, increasing revenue. I'd say this company is not profitable. Now it's burning through a lot of cash, not profitable. So the main thing with this sort of company, at this point in time, it's sort of a story stock, but it's a better story stock because it does have a real business. It does have revenue, increasing revenue, but it's not profitable, that sort of thing. The chart looks ugly. And if I remember correctly, the company had some issues with their products being certified or something in the United States. So if you go back to June last year, and you can just see also the it's highly liquid. You can tell by just the buyers and sellers. There's one buy at 7.5 cents and one buy at 11 cents. So let's have a look at the announcements. And the one announcement that drove the share price down, which was in June last year, Medicare coverage of ex-bladder expected to cease. And on that day, the share price absolutely collapsed. It was down 74%, and it hasn't quite recovered just yet. I think this sort of company, you can just be patient with Pacific Edge. It could be a good time to buy, but I would be, me personally, I would just be patient. What is your, this is from Wally4350. What is your process for finding interesting stocks? Do you use a screener? Announcements straight away. So I go through announcements every single day. If you've never seen me do that, this is what I do. In the tool section of ComSec, I go to company announcements. This is not just PHP company announcements. And there's all the list of announcements that were released on the 5th of April, 670. but then I will or filter it down to market sensitive, and I just go through the announcements. And I've been doing this for 15 years, and over time, you build up a knowledge base of all these companies. Now, companies do IPO, and a lot of times I miss those companies, but then I do go to a website which lists all the IPOs, and then eventually I will look at those particular companies. So it's just a long process, and I'm going through this process right now with American companies, but they don't have a ComSec website that I know of, or similar ComSec website that I know of that lists all their announcements. So that's one thing I find annoying about the American markets. There's no place where you can see all the announcements in one spot. Maybe there is, but I just haven't found it. So that's really the process, the thing I do to find companies. No screener that I use on a consistent basis. I just look at announcements every single day. And some days it only takes me a few minutes to go through the announcements, because the market sensitive announcements, only 68 events were released on Friday, and a lot of these I won't care about. And then eventually, if you do this over a long enough period of time, you will discover that you do know most of the companies on the ASX, or a little bit about the companies on the ASX. And the other thing I look at all financial statements. I look at financial statements of all companies, Appendix 4Cs, Appendix 5Bs, and over time, I will find those companies that I am attracted to, because growing revenue, return equity high, profitable, increasing cash flow into the business, those sort of things. Okay, so thank you, Wally. David Jackson, thanks, Kneppy. Love your work. I'm more into long-term hold strategies. Could you do an individual video on this? I know parts of a certain videos contain it, but a distilled version will be very useful. Please keep up the wonderful work. It is greatly appreciated. I suppose I could do a video on my long-term strategy, so my quality portfolio, and I could do that. So I'll put that onto my to-do list, I suppose. Eventually, I will do that. So I'll just have to write that down. Quality. So a video on my quality portfolio strategy, what I look for, that sort of thing. So in that particular portfolio, I'm looking for companies that I want to own for the long term, and I don't really follow the ongoings of those companies too closely, particularly when it comes to the charts. I don't really care about that. But these are high quality companies, in my opinion. And the most important thing about high quality companies is how you define high quality. How I define high quality might be different than other people. I know people who define high quality in terms of not looking at return on equity, which I think is very important when it comes to quality state of a company. And some people even include mining companies as high quality companies. I don't, because of the cyclical nature of mining companies. PHP would be the closest mining company to being defined as high quality based off my definitions. But it all comes back to how you define as high quality. So probably I should do a video on that, a standalone video on that. Silver, Kneppy, silver, please. Well, yeah, I don't know what silver looks good. Let's have a look at silver. I do have it here somewhere. There it is. Silver looks pretty good. Looks pretty good, doesn't it? Looks pretty good. And it should look good because silver and gold are related, well, sort of. They're second cousins. And sometimes silver takes a while. It lags behind gold. But silver has broken out. I'm calling it right now, just like gold's broken out. There it is. So this is, so I mentioned sometimes silver lags behind gold. I've noticed this previously. And silver broke out in the middle of last week. But if you look at gold, gold broke out. Gold broke out probably well over a month ago. So then again, you just see how far silver is lagged back. And probably the best gold play on the ASX might be Adriatic. And this hasn't really broken out yet. Yeah, so look at Adriatic. They have a silver mine. I think it might be in production in Bosnia-Herzegovina. So that country is Bosnia and Herzegovina. Some people just say Bosnia, but the correct name of that country, I'm pretty sure, is Bosnia and Herzegovina. Anyway, so I have a look at Adriatic metals, and silver looks really good right now. So yes, Ross Joseph Fiend Carmorello. Alistair James, hi Kneppy, great video. I'd love to hear your thoughts on RHC. I hope you're having a good Easter. Cheers, mate. So I am trading RHC, which is Ramsay Healthcare right now. I don't have any thoughts on the company itself, but the chart did look good, started to look good. A little bit of weakness, but I'm still trading it. I'm hoping the share price will bounce. If it doesn't bounce, then I will, well, maybe not profits, but I did get a dividend out of Ramsay Healthcare. If you look at the weekly chart, it looks pretty ugly, to be fair with you. This was a great company back in the 2010s. Beautiful uptrend. You can just see the uptrend on the weekly chart here for Ramsay Healthcare, and then it came to an end. So no more uptrends. The business is sort of stagnant, not a growth company at this point in time. There were talk of, because of surgeries being affected during COVID-19, that companies like Ramsay Healthcare will benefit from selective surgeries, that sort of thing. But we really haven't seen it just yet. And if you do look at this weekly or daily chart, the start of 2022, share price is down a fair bit. So I am hoping the share price breaks out. I'd love to see a share price get to $58 from here, but I'm not confident on that just because of the share price action over the past few days. So that's all I got with regards to Ramsay Healthcare. I'm just trading that company right now. Sham, thanks a lot for these videos. They really helped fast track my investing journey. I also appreciate hearing your thoughts on AWJ. No worries. I don't know a lot about AWJ. Jennings or something. No, Auric Mining. What's the Jennings company? Okay, chart looks brilliant. So, do I have this any of my watch lists? I have this on my everyday watch list, so we should be following the company's move. I just thought this was a Jennings company and gold. So this must be a gold company. Okay, chart looks brilliant. Says market cap is 28.8 million. Is that right? Let's have a look. Market cap AWG. They're at 24.8 million according to market index. So I don't know much about this company, but the market likes it. I don't know why it likes it, but it likes it. So let's have a look. So AWG, have they released any announcements? So let's have a look at the last 3 months. Share price started to move into uptrend in November last year. So let's have a look at the last 6 months. Actually, you can't look at 6 months. So operating cash generated 23 full-year results. So this company is in production, and I am going to do a little bit more research on this company because the chart looks absolutely brilliant. Now, did they do a cash flow report in January? Yes, but the cash flow report might be a little bit behind. So, okay, gold sales, Jeffries find, cash flow operational positive by 4.9 million, increasing cash from 302,000 to 4.5 million. So it looks like maybe this was the first quarter of cash flow into the company. And they've talked about this one as well, 22nd of March. It looks like, no, that announcement didn't cause much of excitement. What am I doing? What announcement is this? Okay, full-year financial results generated 4.22 million net operating cash. A maiden profit of 1.3 million. So definitely you would need to do a little bit more research on this. So the main thing I can see is just the chart looks really good. Beautiful looking uptrend, really big increase in volume. Probably be able to see this if we look at the weekly chart as well, the volume increase. So share price in a downtrend, look at the volume, very sparse, low volume when the share price was in a downtrend. As soon as the share price started to increase, we saw an increase in volume. That's a good sign, and that's exactly what you want to see. Now, I have heard that volume, I've read this in a few textbooks, not textbooks, some books, that volume sometimes precedes share price action. And so we started to see increase in volume around October and early November, and that sort of coincided with the share price starting to take off. So if you sort of caught this and was following this company, Auric Mining, you could have seen the change in sentiment, the shift in sentiment late October, early November, and you could have bought some shares at 6 cents. Now the share price is 19 cents. Otherwise, I don't know much about Auric, but definitely a company to put on my watch list, and I've just written it down. I've just written it down right now. Sham, thanks a lot for these videos. No, I've already done you. Thank you. You're welcome. Can you please tell us about IDP stock? And then someone wants to talk about CAT. I can do both of them. So let's have a look at IDP. So this, I'm pretty IDP. Is this IDP Education? So if it's IDP Education, it's IEL. So I'm assuming that's what you're talking about, because according to this, there's no IDP ticker code on the ASX. There's just an IDP Education. Okay, first thing, chart looks absolutely horrible. Now, I do have IDP Education on one of my daily watch list, because I think eventually value investors, because this is, I wouldn't say it's a cult stock, but this company used to be mentioned a lot by experts, fund managers, as a high quality company. But the chart looks absolutely ugly right now for various reasons. Market cap 4.9 billion, P ratio 29.8. P ratio of this company was over 50 not that long ago. Now the share price is in a long-term downtrend. Now, if you look at the weekly chart looked absolutely brilliant from when this chart began in 2016 all the way through to late 2021. A beautiful looking trend in the chart. So this is actually indication of a high quality company. Something must have happened to this company recently for the share price and the sentiment to shift to looking pretty ugly. Also, the share price fell through this important level recently as well. And actually, that wasn't recently, that was quite a while ago. That was the lows in 2022, and the share price has just continued to go lower. What I'll be looking for here is some high volume. We saw some big volume coming in late February, but that would have been around the time the company released results, or just after results, and the share price just keeps on going down. I would not be interested in this company just yet because of the chart, unless I was a value investor and I saw some value in this company. So, and again, if you just go to this, or go IEL, what I'd do with this company is, I'll just show you what sometimes I do. And I showed you this already. I'll just go to the PE ratio, say. Don't always like the PE ratio, but PE ratio of this company now is below 20 or below 30. The last time the PE ratio of this company was below 30 was way back in 2017. So on that basis, you might say, well, maybe this company is becoming good value. Now, I also like to look at some other stuff like EV to free cash flow, which is one of my favorites. Now, sometimes one of the reasons why I don't like to look at this valuation metric is you get these little stupid numbers. But right now, the EV to operating cash flow, free cash flow for this company is about 50. And it has been lower than this in the past, in 2021. So maybe no value there. Let's have a look at the income statement. I don't think there's going to be any, it's revenue still growing, but for some reason the market does not like this company right now. And I think the best way for a shift in sentiment around this company would be some good news from the company, or enough value investors see some value in this company that could put a floor on IDP Education's floor price, share price. Now onto Catapult. I missed this one because I was a shareholder and I took profits, and then the share price just rocketed up. So yeah, I can understand why some people want to talk about this company. So that's the daily chart for Catapult. It was trading in this channel, and then I just went, I'll just take profits because I bought way back here at 99 cents. So I was willing to take 20% profit, and the share price increased about 21% on the 26th of March for no reason. Company did get a price query, and the share price hasn't pulled back since then. I'm wondering, this is my thoughts, I'm wondering, the company should be releasing their results soonish. Have they mentioned when? Not yet. So let's go back 1 year ago, see when they did release the results in May. So the 22nd of May, still over a month away. And I'm just wondering, because again, the company has not released any news, just a price query response on the 26th of March, and that's it. Last time the company released price sensitive announcements was the results in November. I'm just wondering if there's some loose lips out there and those results are going to be really good, or maybe, and it's some pretty good volume as well. I have heard that some people say, well, this company's illiquidly traded. I don't think it's that illiquidly traded. For instance, yesterday we saw 353 trades, 111,000 shares traded. That's not illiquidly traded, in my opinion. If you go through the trade history, some days you see over 1 million shares traded. That's not the definition of liquidly traded, in my opinion. I just think the market is confident that the results in May are going to be really good. And I just wish I had on to my shares, because that would be up 66% now. But you don't on your decisions. In my opinion, you should learn from your decision making, but not regret your decision making. So thank you, Michael. Great name. Okay, let's have a look at the next announcement. 5 stocks to watch. March quarter results for companies I own. 13 comments, almost 1,000 views, 61 likes. One person did not like it. And that's probably one of the most liked or thumbs up videos. And if I see you like one of my videos, I will do more videos on that sort of thing. So let's have a look at the 13 comments left in this particular video. Should probably speed this up. Kneppy, last time you talked highly of MicroX, do you hold any position of MicroX? No. So even if I like the potential of a company, doesn't mean I will hold a position in that company. I do think this company has potential, but I have never owned a position in this company. I'm just waiting for that potential to be realized. So they do some interesting things. And for instance, manufactures, designs, and develops products for the global healthcare and security markets, utilizing MicroX proprietary cold cathode X-ray technology. And they were doing some interesting things, but I did my original video on this company about 3 years ago, and they just haven't realized the potential just yet. And just to verify that, let's have a look at the company's most recent Appendix 4C, just to see that. So what I'm waiting for here, did they do it? Yeah, there it is. For me to see that they are realizing the potential is increasing cash receipts and the company becoming operating cash flow and free cash flow positive. And they haven't quite got there just yet. Now, you might be saying, well, they're operating cash flow positive by 4.3 million in the most recent quarter. That's after they received $6.2 million in research and development tax incentives. In my opinion, that does not belong in the operating activities section. So if you take that away, they were operating cash flow negative by $2 million. Receipts to customers, $3.7 million. But I like to see momentum in cash receipts. I like to see the company becoming operating cash flow positive. Up until then, the market does not care about this company at this point in time. Share price going sideways, consolidation phase, and you can be patient with MicroX. And if the company releases a really good quarter, you might see the share pop up, and that's the time to get excited about the company, in my opinion. So I've changed my philosophy around these type of companies. Instead of buying on the potential, which is what I used to do, buy on the point when looks like they are realizing that potential. Because I would say the majority of companies that have potential never realize that potential. So why take that risk? Piwu, we appreciate your thoughts on CDA. It is worth a long time holding. Chart is good, particularly the weekly. Thank you, Chris P. So again, this is another company that I probably sold a little bit too quick to trade. So have a look at the weekly. The weekly does look, actually, they all look good. So this was another Matterhorn pattern share price, a beautiful uptrend. Then it fell off a cliff for some reason, went all the way down from 19 to $4, reached $4 back in late 2022, early 2023, and weekly chart looks good. Daily chart looks really good as well. Share price broke out above $9 when they released their results. That was a beautiful break. But even before that, share price was in an uptrend. It looks fairly similar to Service Stream. Share price was just grinding higher, and that's one of the reasons I sold, but I didn't sell out of Service Stream. Maybe I should have done the other way. So Service Stream, look at this company's chart. Fairly similar. Share price broke out when the company released their results. So fairly similar patterns, but I sold one, not the other. Now, I did see the share price of Codan just pull back the last few days into the green zone here, which is the short-term moving average channel. And sometimes that can be a support level. And I just have to get up and close the door. And that can be a support level, that moving average channel. And when I saw that, I went, oh, this could be a nice little technical play. Other than that, Codan, I've done a little bit of work on Codan in terms of whether it's a high-quality company or not. So I only own high-quality companies for the long, well, no, I'm going to phrase this a little bit different. The only companies I own for the long term are high-quality companies. And that's the thing with Codan. Is this company a high-quality company? So let's go back. Let's go back. No, not ticker. We could do ticker. CDA. There are things to like about Codan. Now, one of the things I didn't like about this company was their gold detecting. So they have a couple of different sections. They have one section where they sell gold detection stuff, whatever you call metal detection stuff. and they also have a communication section. So when I first started researching this company well over 10 years ago, they were highly reliant on that metal detection division, and they have diversified, and that's one thing to like. So return on equity is 26.2. That's really good. Return on invested capital, 23.6. This is 5-year averages via FinChat. So those are really good. Exactly what I want to say. P ratio is 23. Growth, revenue, 11.2% over the last 3 years, 14% over the last 5 years, 11.8% over the last 10 years. Not revenue per share growth, however. So there are things to like just by looking at these sort of metrics really closely. Another thing I look at is total revenue, which I've already seen by revenue growth. This is exactly what you want to see. And the other thing is gross margins. I like to look at gross margins. And gross margins have been dropping over the past 7 years. That's not necessarily a bad thing, but I would prefer to see gross margins at least being stable, if not rising. So definitely there are indications that this could be a high quality company, and as such, it could be a long-term buy. And it's all around your conviction and how you do define high quality of a company. So it all depends on you. For me, I think it's very close to being a high quality company, and which means it could be a long-term play. But I have only traded Codan in the past. Pumping out the videos you see, Star, he's bored with 4 days of no trading. Okay, I never get bored. It's one of the reasons why I don't understand why people who retire have a hard time. I read an article the other day how a lot of retired people are going back to work because they just like going back to work. I don't understand that. I never get bored. I have things to do every single day. I watch TV, read books. So, for instance, tomorrow I'm going to take the dogs for a 3 to 4 hour walk in the morning. So every single morning I'm out at least 2 hours per day, just going for a walk. Even on weekends where there's no trading, I have things to do. I watch sport. And when I say watch sport, I watch sport all around the world because I lived in America for 8 years. So I love American sports. So there's always something on to watch, always something to read. I never get bored. I'm learning languages. In fact, this is one thing about me. People don't understand this about me. The only reason I sleep is because I have to, and we all have to sleep. If I had the ability not to sleep, I would not sleep. I don't understand people who just lie in the bed in the morning and sleep in. I never can sleep in. I wake up at about 4:30, 5 o'clock every morning, and I have to get up, and I just get up because I have things to do. So I never get bored. But I love investing. In fact, I'd love to see the market open every single day, 365/7. Kneppy for PM. It is said those you want in power of a company or a country are those who don't want it. I don't want to be PM, which means I probably should be PM because I probably could do a better job. And the reason you want people who don't want to be in that role to be in that role is because typically those people will make decisions for the beneficial or the benefits of the country at large or the organization at large. But unfortunately, right now, most of politicians, most of CEOs, apart from founder-led CEOs, are only in those positions because of self-interest. And that may seem pretty harsh, but this is particularly true for politicians. They don't care about the country. They don't care about the country at all. The only things they care about is maintaining their power, their party's power for the next cycle. So they're just preparing to get re-elected for the next cycle. They don't care about the future of the company. That might be a little bit cynical, but history has shown the best leaders of countries are those leaders who never wanted to be in that position. Just Google Cincinnatus. He was a Roman general who was put in as a dictator of the Roman Empire twice. And as soon as the reasons he was put into that position twice was no longer an issue, he relinquished his position as a dictator. You would never see dictators do that. Even George Washington, apparently George Washington was a big fan of Cincinnatus. Cincinnati, the city in America, is named after Cincinnatus. I'm pretty sure there's also towns in Italy that are named after Cincinnatus. George Washington could have been president of the United States for as long as he wanted. He said, no, we need a term. Apparently he never wanted to be president. Maybe that's not true. Anyway, I'm rambling on again. Holding Pilbara Mining, EVN for gold. Okay, yeah, I'm not going to look at charts for both of them, but I can understand Pilbara Mining. I'd probably say it's one of the highest quality lithium companies, and I think lithium will eventually hit a bottom, and maybe Pilbara Mining is a company to be. And Evolution Gold, yeah, it's one of the highest quality gold companies on the ASX, I'm assuming. Okay, Shirley Dugmore, when I saw those figures, numbers ones, I could see it was Megaport. Don't blame you for thinking of stepping off. I have taken profits with Megaport. Yeah, so I've already taken profits with Megaport. It fell through my sell point. I don't call it a stop loss because it's not a true stop loss because I've never used stop losses. But I did have a sell point for Megaport at $14, and it's fallen through though. Excuse me. In fact, I sold it at $14.10, so I was a little bit quick on the trigger. I sometimes do that, but I wouldn't be surprised to see the share price bounce for Megaport. Thank you. Thank you, Shelley Dugmore. We have elections in South Africa in May. Put Kneppy on the ballot. What a man. Thanks for still. I don't know if I could be a South African politician because I'd probably make sure that Australia never loses to South Africa in cricket ever again. Well, no, that's unfair. Yeah, the funny thing is, one of the reasons I'd probably run for politics in Australia is just to get their really good superannuation. And is it surprising that politicians have the best super in the world or in Australia? Is it surprising they have it? Surprising they gave themselves that? No, I'm being cynical again. Is it surprising that politicians have the best super? And that's the only reason I'd probably be politician intentionally is to get their really awesome super. Bloody 3DP lost the most money on this one. I'm still in though. Yes, I'm still in. Just yes. I just think just because of that potential. So this is one of those companies that I bought into because of the potential, and now I would not buy into Pointerra until I see they're realizing the potential. And this is the reason why. So just a change in my strategy over the past few years is not buying on potential, but buying on the realization of the potential. And Pointerra is one of the reasons why. Chart looks absolutely ugly, but the market cap of this company is getting to the point where I think if they release a really good quarter, and I think there is potential, eventually they will release a really good quarter that's going to surprise the market, share price is going to take off, and the sentiment in this company is going to shift almost immediately. And I will trade Pointerra at that point in time. But at this point in time, I've said point twice now, unintentionally. At this point in time, no reason to get in Pointerra just yet. That's for me. Or add to my position. I do have a small position in Pointerra. Should I take profits on Superloop or just hold only a small position? Okay, this is an interesting one because I had the same questions. Superloop. I was getting pretty sick with this Aussie broadband Superloop. Wouldn't call it fiasco. So I took profits. I bought at 80 cents. I took profits at $1.25. I should put it in here. About $1.25. But I didn't completely sell out because I was unsure. So I thought I'll just take profits, a small amount of profits, and then let the other pit run because I am interested in this space. So I've not completely taken profits. Share price has lifted a little bit from when I sold. That's okay. But yeah, similar feelings to you, Herbert von Sauerkraut Tuntura. Yeah, I have taken profits, but I'm not completely sold off because I'm unsure exactly what is going to happen with Superloop and Aussie Broadband. So yeah, small position. I wouldn't classify my position in Superloop small at this point in time. Yeah, not as small as some of our positions. Looking forward to Alcidion and ARX as well. Okay, these are two companies that I almost put on my other 5 stocks to watch of companies I don't own. They were very close. And the main reason is because of how the share price has performed recently. So Alcidion has ugly looking sharp. This was another market darling. There were people just singing the praise of this company. Share price went to a high of about 48 cents in May of 2021. Now it's 4.6 cents. Share price has fallen 90% in the last 3 years. Market cap 63 million. It just is not realizing the potential. Again, going back to not realizing the potential. So when the share price was rallying, people were just getting excited about the potential. They just have to prove their potential. Aroa is sort of similar. Favored company among this channel and also among fund managers. One of the most favored stock at the start of the year. to perform really good in 2024. However, they have released a couple of disappointing things, and the share price is in a downtrend. So again, this is another company where share price is in a downtrend. I'm just going to wait. So I was a holder of this company because of this part of the chart. I was just trading this company. Looked really good back in late 2022, and then that steam ran out fairly quickly, and I took some profits. So it would have been in about 1 year ago. And whenever you take profits with a company like this that has potential, you do, I wouldn't say fret over the decision, but you do follow closely the share price performance. And I was following Aroa for a period of time, but then the share price moved in a downtrend, and that's when I realized, yeah, it was a good decision to sell out. Nice little rally in December, but again, share price moved into the long-term moving average channel. That's an area of resistance, and share price fell in late January, so it must have been on their Appendix 4C. So I am looking forward to both Alcidion and Aroa just to see if things are turning around for the better for both companies. So thank you, Philip5162. Okay, next video is Credit Clear. Credit Clear. Staff costs are too high. Yeah. One of the things I do look at is staff costs in a company, and that's one of the things I did find with Credit Clear. Staff costs were quite high, and I do look for companies that have low labor costs, which means they're going to be more efficient because labor is one of the biggest costs of a company. And I don't like companies with a lot of people, which is sort of another paradox. So as a country as a whole, we want everyone to be employed. Or better way, we want everyone to be employed to be employed. I think we have full employment now. But for a company, you want as few as possible as people as possible to be employed because then they can be more efficient. Another sort of company I don't like is those companies that when they're growing have to employ more people. I like companies who grow and have the same amount of staff, so they can utilize that staff more efficiently. So hopefully that makes sense. That I've seen this a few companies saying they're increasing the staff levels because they're in that growth phase. But as they keep on growing, they have to keep on growing their staff. And they're less efficient than those other companies that they can grow their business without needing to grow their staff. Hopefully that all makes sense. So I did find that Credit Clear had a little bit too much staff costs. So let's have a look at that. And that is one of the things I actually do look at, staff costs. Now, I don't mention it all the time. In fact, sometimes I don't mention it at all. So if you go back to their Appendix 4C, you'll be able to see the staff costs in, I think you should be able to see it. Staff costs, yeah, 5.4 million. So that's high staff costs compared to receipts of customers. So I want to see staff costs not increasing through time, or nowhere near as increasing through time as much as receipts. So I definitely agree with that comment. Staff costs are too high. It's probably one of the reasons I haven't really taken position in Credit Clear, even though I do think it is looking interesting. Can you cover Mesoblast moves past FDA announcement? Is it too bullish as no concrete approvals obtained? Yes. In my opinion, yes. It's not the sort of announcement I would get bullish on personally, but the market is thinking differently. Keen to hear your thoughts on a substantial position one investor has accumulated. Is this insider info about potential FDA approval in future? Not necessarily, but I just think Mesoblast is just a trading stock right now, a day trading stock. It's not the sort of announcement that would get me interested. But yeah, just the share price and the volume makes me think this is a day trading stock right now. And typically day trading stocks, I'm staying well clear of those companies. And when it comes to that substantial investor, no, I don't really look at those sort of things, change in substantial holding. Is that what you mean? I don't really pay attention to those. It doesn't mean anything. Doesn't mean anything at all. So what is this one? Let's have a look. Gregory George and G to the fourth investments increased their holding by 20 million shares. It doesn't actually mean much. It doesn't mean they're privy to any information that we don't know. Not necessarily. I just don't. The FDA notifies clinical data sufficient for refiling. That sort of announcement doesn't make me go out and think, wow, this is a company making an announcement. Not quite like Neuron Pharmaceuticals. Their announcement they released towards the end of 2021, was a company making an announcement. This one, nah. But the market thinks differently. And that's what makes a market. We all think differently. Okay, Ruben, it's like you. Ruben, could you also look at LIC and SGP? Property development sector that has started to attract the big guys like Vanguard, State Street, and BlackRock. I'm not a big into property at all, so lifestyle communities, chart looks pretty bad. What's happening with this company? Share price took a bit of a dive on the 23rd of February, so that must have been results. Okay, so this is a case where you could see, if you just put a line right there, you could put actually two lines. So what I'm going to do is I'm going to copy and paste, copy, paste. So this is sort of a support zone for LIC going all the way back to July 2022, so almost 2 years ago. And when the share price gets to this level, $14.50, or between $14 and $14.50, we have seen support for this company. Share price going sideways other than that, and share price is right on $14.50 right now. And not only that, share price bounced off $14.50 back on the 27th and the 23rd of February, and then the share price bounced to the short-term moving average channel. So this is one of those instances where I do the strategy of buying on the support level, and I do prefer those plays where there might be a 10% bounce. So buying lifestyle at $14.50, I would have wanted the share price to get at least up to $16, and it did briefly. So this was a potential bounce, and then the share price hit the short-term moving average channel and has fallen back to $14.50. But a lot of weakness in this company right now, a lot of volume coming in. Weekly chart, just share price going sideways. It was a good chart. This is a high. If you look at the chart up until late 2021, this is the hallmarks of a high quality company. But since then, not so much. So that's LIC. And just based on the chart, there could be just a trade there because of where it is. SGP, is that Stockland? SGP? Yeah, Stockland. So even though I'm not interested in this space, I still know some of these ticker codes because I've been investing for 15 years. And sometimes if you see the sticker code, if you see the ticker code enough, eventually it gets ingrained into your mind and you just know what the company is. Stockland looks good. Looks actually pretty good. I probably would ignore the PE ratio of 47.3. Chart looks pretty good, actually. But this is probably why I don't invest in these companies. Look at the chart, the long-term chart, just going sideways over the past 10 years. This would probably be a dividend play, 4.75% dividend. Even then, yeah, this company wouldn't interest me at all just because of the long-term chart, not much of an income play. And what you could do even, what I might even say is when the share price of this company gets above, say, $5, that would be sort of a sell level, and it's 472 right now. Anyway, so not much interest in either of those companies, to be honest with you, Ruben. Thanks for another update on this company. You're welcome. You're welcome, nice. Look, no, cancel. You're welcome, nice. Okay, I'm going to try to do more of these company-focused videos like Credit Clear, like I did. I'm going to do with Aroa very soon. Now, let's have a look at the ASX Daily Rundown video from the 2nd of April. Oh, 2 people didn't like this video. Oh, 2 people. Okay, invested in SVL, hoping for a DFS soon and breakout on ag price. Gold has broken out. I'm mostly on the miners right now. Silver, gold, polymetallic miners. Portfolio's looking green right now. I think being in the commodities is the right side of the trade right now. Just my 2 cents worth. Yeah, everyone has a right to an opinion. That's what makes the market. And to be honest with you, the whole reason why my portfolio did pretty well the other day on Friday was because I do have some positions in miners, and they actually did pretty well. So SVL, hoping for a DFS. So that means, what's DFS stand for? I forget. Financial statement? Diligent financial? No, I forget. So SVL, I'm assuming that's silver. Silver, I'm going to guess. Silver mining, SVL. Silver mining. Silver mines. There we go, very close. Yeah, so this company, I suppose, is still, what do you call it? An exploration company. And the DFS is like where they, how do you explain it? I don't know. Weekly chart for silver mines is, yeah, I will not be interested or excited about this company just yet. But um, what you probably would see, and I see this a lot when gold breaks out or any commodity breaks out, it's the explorers that break out last. It's usually the producers who break out first, then the explorers break out eventually. For instance, I think I showed you two gold exploring companies that I am interested in. Pack Gold, it's not breaking out, still going down. And what's another one? Rocks Resources, still going out. So these are gold exploring companies. Oh, it looks like Rocks Resources has sort of seen a bit of life recently, but not high volume. So it's usually the gold explorers that find life last, or the commodity explorers. So I think eventually you will see silver mines take off. If silver keeps going up, gold keeps going up as well. Okay, thank you, Casanana. Promo SM, no idea what that means. I'll still like it. Clinuvel has just started a share buyback. Thanks for sharing your knowledge and enthusiasm. You're welcome. What is your sale price for this? Share buyback doesn't necessarily mean you will see the share price take off. But I'm very happy that Clinuvel has done a share buyback because I do think the shares are cheap. And that's exactly when a company should do a share buyback, when the shares are cheap. And we have seen massive volume coming in for Clinuvel over the past month and a bit. Massive volume. So that's actually a good sign moving forward. And I do think the shares in this company are cheap. I do have a position in this company, a long-term position. So this is in my quality portfolio. You might be able to argue with me that this is not a quality company because they're a one product company. But if you look at the annual revenue increasing through time, it's profitable. Not as profitable the last half year, but there are reasons behind that. The main reason is they're spending more money on research and development, that sort of thing, if I remember correctly. But I think the market is just misreading this company completely. Dividend yield of 0.31%, but price earnings ratio of 27.4 for a company that's growing like this. Let's have a look at the revenue growth, even the profit growth. Let's have a look at their revenue and profit growth. So total revenue, and we'll also put profit here too, net income. A company with a P ratio of 27, for a company that's grown their revenue from 2 million to 82 million and profit from negative to 30 million, and that profit is continued to grow, and revenue will continue to grow. So it's a growth company, but the market is unsure about this company. But again, it's a one product company at this point in time. And I think the market is wary about those sort of companies. But the share price is in a downtrend. So don't want to be completely bullish. Share price is in a downtrend. And what's happening right now with Clinuvel, share price has moved into the long-term. Actually, this is the long-term moving average channel. And it does find that area to be an area of weakness. And we saw that here, sort of almost broke out here, back in December, moved into that long-term channel and found weakness, and also moved into long-term channel back in February, and then pulled back. So we need to see some strength in Clinuvel, and I am hoping the increase in volume is an indication that the market is liking this company a little bit more right now. So thank you, Peter Hill, artist. Adrian. Hi, Michael. Would be curious on your thoughts on Whitehaven's acquisition of Blackwater. I know coal seems out of focus, but on face value, this seems like a great acquisition. I am a shareholder. I have no opinion on the acquisition of Blackwater, but in saying that, I'm going to say something maybe a little bit controversial here, maybe not. I think coal companies should be making more acquisitions because companies like BHP want to get out of coal because of ESG things, and they're probably willing to. I'm pretty sure BHP did sell out their coal portfolio at really cheap levels. I can't remember who they sold it to, and I'm pretty sure Glencore is buying coal assets on the cheap because of ESG things. And that's the thing to do because coal's not going to go away for a long, long time. And if these coal companies can get these assets on the cheap, because they're going to have troubles building new coal mines because of ESG things, banks are probably not willing to fund. So I would be bullish on any coal company buying assets, particularly if it's on the cheap. I haven't had a look at this particular acquisition. I don't even know they made an acquisition. Don't follow this company too closely. Oh, it wasn't that long ago. 4 days ago. There we go. Oh, that's complete. So they made this announcement a long time ago, and um, on the surface, I would say that more than likely this will be a good acquisition. It all depends on the price, but I'd say the price is going to be pretty cheap. Um, yeah, so well, probably good price because it is coal, and coal is still a bit of a taboo commodity. And yeah, so I have been trading Whitehaven. At this point in time, the chart looks, it's neutral. It's a neutral chart. Share price not doing much. You also have to look at the gold prices, but look at the weekly chart, and you just see how cyclical coal has been over the past 8 years. There are times to buy these sort of companies, time to sell. But I'm getting to the point where I think coal companies are going to look really cheap for a long time. And if coal prices stay even where they are, a lot of these coal companies will just be generating a mountain full of cash. And I think they're going to give a lot of that cash back to the shareholders in terms of dividend. Dividend yield of this company is only 6.8, which surprises me. Price to earnings ratio of 5.2. So overall, I would be bullish on any coal company buying coal assets because of the negativity around coal. Will Cettire more worse tomorrow? So sad today. Yeah, Cettire. But here's the thing about Cettire. It's a hugely volatile stock. And this is the weekly chart. Now, there is an uptrend, and this uptrend developed way back in 2022. There's an uptrend. The uptrend line is at $2.80. Share price of this company is $3.27. Wouldn't be surprised to see the share price bounce off the uptrend line soonish. But you can see the volatility in the share price. So Cettire released the half-year results. Share price on that day increased 25%. Share price went to 480, and then some negativity from AFR. Seems like AFR are shorting Cettire right now. And then the share price has collapsed down to 320. And the share price is now into the long-term moving average channel. And that moving average channel, alongside the uptrend line, tends to be, or has been, a little bit of a support level. So possibly Cettire is at a support level right now. I would not be selling Cettire, and I am a long-term shareholder of this company because I do think there is, or hopefully a long-term shareholder of this company, because I do think there is potential in this space. I wouldn't classify Cettire as a quality company. There's a lot of competition in this area, and there are things not to like about Cettire, but just their growth has me thinking, yeah, that's the main reason I bought some shares, just the potential of growth. Anyway, so I wouldn't, personally, I'm not quite at the point where I would be selling Cettire because the share price could be getting towards a low soon. Bit of a bad day for Nuix too, on no news or significant volume. Let's have a look at Nuix. I haven't been looking at Nuix for a while. I have a feeling the chart looks okay. Yeah, the chart doesn't. So there must have been a bad day. Share price decreased 5.8. That's not a bad day. Nah. Chart still looks pretty good, but I think the market is getting a little bit ahead of itself right now. Nuix market cap is almost 700 million for a company is barely profitable. Barely profitable, if profitable at all. What about an update chart on Zip? I've done a lot of charts on Zip. Yeah, a lot of charts on Zip. Hopefully you've seen some of those videos where I've updated the chart on Zip. So let's do another chart on Zip. And okay, so I'm not trading Zip now, but I do have a longer term position because I bought at 55 cents, sold at $1.25, and I didn't sell completely out. I decided to let that that portion of the share, or that portion I holding, go on a bit of a run. So sort of like free holding, is that what they call it? When you take profits, but then you don't completely sell out. So say you bought $1,000 worth of shares, share price goes up to $2,000 worth of shares, then you sell $1,000 worth of shares and you maintain that $1,000 initial capital position and just ride it because that's a free shares. Those are free shares because you've taken your profits, and it may not be a good way to look at it, but that's sort of what I've done with Zip. I sold, did not completely sell out at $1.25. I took the profits and have maintained a position because I'm not confident that the end of the Zip story is here just yet. We have seen a dip, but where's the share price right now? And this is what I was thinking the other day. The share price has moved into the shorter term moving average channel. And when it did this in the 27th of February, share price took off. got very close again on the 5th of February. Share price took off. It moved into this shorter term moving average channel in 15th of January and then took off. So there is a potential that the share price might take off from here because it's moved into this support zone, which is the short term moving average channel. The way to look at this is when the share price moves into this zone, it's a short term trade. When you see the share price of a company that is trending up and it moves into the longer moving average channel, that's a long-term trade. I'm wondering if I can find an example of that. I can't remember an example of that offhand, which surprises me. But Cettire was short-term moving average channel, pretty sure. Let's go back to Cettire. No, Cettire, yeah, okay, Cettire is the longer-term moving average channel, where it sort of bounces off. Not completely. I think the long-term trend is the better thing to look at here when it comes to Cettire, but Cettire has been bouncing off the long-term moving average channel on occasion. The short-term moving average channel is just all over the place, and that's an indication that this company is quite volatile, just up and down, up and down. So yeah, Cettire is a good sort of comparison to Zip in terms of which moving average channel I do look at, the shorter term or longer term, and that's the way you trade it. Zip is a short-term trade. Cettire might be the longer-term trade. Hopefully that's all clear. Okay, that's it for the 2nd of April. Let's go back to 3rd of April. 3rd of April. Thanks, Kneppy, for looking at the email. It was an intraday for the stock. Very volatile the last few days. So I won't look at email payments right now. Promo SM, what is that? What does that mean? If I remember correctly, I think around 2014, they sold out their male hormone product. Oh, this is Acrux, with a large cash return, then some left for development. Yes, Jason Wiley, male hormone product. I just remember it had something to do with males, and so I just thought it was something to do with steroids. It was highly cash flow positive, that product, and then something happened 10 years ago, memory shot. Thank you, Jason Wiley. Acrux, and then it looks like maybe Acrux has found some more products, not as controversial as that male hormone product. Janks, refreshing to hear someone else with the same philosophy on stop losses. Last time I suggested not setting stops in advance, I was lynched by the expert trader mob. Thank you, Janks. Oh yeah, I did use stop losses in the past, and then I went, why am I using these stop losses? Because I was stopped out of a couple of positions when I didn't want to be. And some people would say, well, you use the stop losses in the wrong way. No, if you look at the charts every single day, you don't need to set your stop losses. And I have seen so many times where a share price of a company drops and then recovers almost immediately, because I'm pretty sure a lot of the experts, a lot of the traders know where people step the stop losses, and they try to trigger stop losses. So thank you, Jay Lanks. Can you please do a dedicated short video on Prophecy Group? Yes, I can do that. I'm pretty sure I haven't done much or any videos on Prophecy because I am a shareholder of that company. So yes, I'll do that. Nice. About time, because the chart looks absolutely brilliant right now. Now that could be another company where I bought on the potential, and I've held Prophecy for a long time. In fact, I discovered Prophecy way back in, not then, I have to look at the weekly chart. I discovered Prophecy way back in 2014. And then this happened. Share price of Prophecy went from like 30 cents to $2.50. And I was like, wow. And then Matterhorn pattern. Yeah. And a lot of this was just based off promise, if I remember. They might have been slightly profitable. I can't remember. But this is definitely another instance where maybe just trading on the realization of the potential. But I think the company has reached that point potentially. And again, say that word again, potentially. And that's why the market is getting a little bit excited. I would prefer a little bit more volume in Prophecy, but it looks pretty good. So yes, I can do that. I've written it down. Prophecy. Short video on Prophecy. I thought you was going to say, instead of long video, like going long on a company or going short on a company, selling short. I thought that's what you meant when do a short video. Why should I sell Prophecy short? Yes, idiot. Okay, 5 stocks to watch. Companies I don't know. Let's have a look to see what you have written in this comment section. So you might have noticed I have not looked at these comments before. Superlaz, morning Kneppy, just a simple request. Could you kindly include the ASX codes on each stock intro slide? Love your analysis. Codes. I think I do mostly that. Do I do mostly that? Okay, I'm not sure. But I try to do that. David Race, but I definitely will try to do that. Kneppy, my opinion on Paysauce NZX is that it's overvalued, but they're focused to be cash flow positive. Maybe I've missed you talk about it, but I'd love to hear your thoughts. I have no idea what Paysauce is. Paysauce. Did I mention this recently? I don't know. Paysauce. I have no idea what Paysauce is. New Zealand listed. Chart looks pretty ugly. Market cap 35.3 million. Probably has revenue, increasing revenue. Looks pretty good. Revenue, or it's only $4.7 million of revenue, but close to being profitable. So if this company was listed on the ASX, I might be looking at a little bit more. Forecast to be cash flow positive. Yeah. No, I never talked about Paysauce because I don't know it exists. So, but thank you. Are they thinking of listing on the ASX? I don't know. Cancel. Love the link. Exciting companies. You're welcome, David Race. 2 comments for you. Forest Hill, good video, thank you. My issue is that I've got too many companies on my shortlist to buy and not enough money. You mean both? Oh, no reply. Okay. I have a lot of companies on my watch list. A lot of companies. So that is a problem I do find is which ones to buy that on your watch list. Yeah. Can you do a chart on Zip? I've already done it. RSG and SPR. RSG. Let's have a look at RSG. Resolute Gold. Is that Resolute Gold? Yes, Resolute Mining. I got the last bit wrong. Okay. You would think, because of what's happening with gold, most gold companies' chart looks pretty good. But I would have expected this to look a little bit better because there is a little bit of resistance level right here. So when I say looks good, we're talking about West African resources. That looks pretty good. Absolutely stunning looking chart because of what's happening with gold prices. I'm assuming Perseus looks the same. And there is a similarity between West African resources and Perseus. It's where the gold mines are in Western Africa, and there is perceived of a sovereign risk. So these companies should be valued less than other gold companies. I don't buy into that because there was a Coupitat, what do you call it? Coupitat, whatever you call it, in Burkina Faso. And for instance, West African resources, because their mine is in Burkina Faso, their share price did suffer for a very brief period of time, but the coup meant nothing to Burkina. So I think there's an overstated the sovereign risk in many of these companies is completely overstated, apart from Dominican Republic of Congo, which I would never buy a company in that country at this point in time. But I think these other countries are fine. There is, there's things weird happen in some of these companies like Curves, but a lot of times it doesn't affect their mines because these mines do provide a fair bit of cash to the countries. In fact, I would say China is a bigger risk or has greater sovereign risk than these West African countries. It's just my opinion. So Perseus looks really good. West African looks really good. And the reason behind that is because these companies produce gold really cheaply and they are cash flow generative monsters. And Northern Star would be another one. Maybe look good. Oh, it's looking better. But Resolute, Resolute looks probably not as good as I would have expected. Apart from that, I don't follow this company all that closely. And what's the other company? SPR. I can't tell you what this company is. SPR. Spartan Resources. Okay. Well, the chart looks pretty good. This chart looks great. Markup 652. I'm assuming this is a gold producing company. Yes. SPR. Let's see if it's in my watch list. It should be. It's in my gold watch list. I don't know why I haven't noticed this before. It's a brilliant looking chart. Maybe the one of the reasons I haven't noticed is because in the last year, they only had $57 million of revenue and were not profitable. Maybe that's why. In the last half year, not profitable. No revenue. So their mine has been depleted. So I don't know anything about Spartan Resources, but the chart looks really good. You can see this little bit of a dip. That's the best time to buy. When you see this little dip, I'm trying to change strategies where I don't buy companies when they're well away from the short-term moving average channel. I'm trying to do that more and more. But even if you go back to the start of this run, the share price always dipped back to the short-term moving average channel on occasion. So I should maybe use that philosophy more and more. Only buy when the share price is or has dipped back to the short-term moving average channel. Something I've been thinking about recently. Why did you say out of MP1? It's just to take profits, and the share price dipped below my stop loss point. It's not a stop loss; it dipped below my stop loss, and I do think if the company releases their quarter results, I'm not sure they will, and there could be a lot of volatility. And if the disappoints the market, the share price will drop between 10 and 30%. We already know that because that's a volatility in Megaport. So. If the company releases a really good Appendix 4C, if they release one, I will buy on the release of their report because the share price should pop up. Yeah, so it's just de-risking. Probably the best way to say it. I'm just de-risking my position in a Megaport, and I have no position in Megaport right now. Okay, and let's go to my Kneppy's ASX rundown, the 4th of April. Only 3 comments in this one. David, XB1JY or I, thanks for the video. Any thoughts on corporate management and Credit Corp? I have high hopes for corporate management over the next 2 or 3 years. Okay, I can definitely do both of those companies. Let's start with Credit Corp because I'm not the biggest fan of this sort of company. And I just don't like debt collectors. I had a bad experience with debt collectors in America because I funded my education by loans. So I went from undergraduate to graduate school, and when you do that, you don't have to pay back your loan. And I just forgot to tell someone, and they forgot to tell someone, and then it went to a collection agency, and they got in contact with me, and they were bad. And yeah, they were bad. I said, I'm still in graduate school. I should be repaying the loan. They didn't care. So bad experiences with debt collectors, and maybe Credit Corp is completely different. But the chart looks, after that really nasty 18th of October experience where the share price dropped 30.5%, share price recovered really nicely and back up to those levels before that announcement. Overall, the daily chart looks not excited. The weekly chart, probably not excited here. Share price has done nothing in the last 8 years. Where the share price is right now was where the share price was in 2016. So I'm not the biggest fan of this company because of what they do, but the chart looks really weak. Now, before that, if you do look at the weekly chart looked really good. Now, notice if you go far back far enough, this company really suffered in GFC. I suppose that is a concern of the market, that this company might suffer again during any sort of recession, and maybe that's why the share price is in a longer-term downtrend. Okay, so not the biggest fan of Credit Corp, but corporate travel management is different. I do have this company is in my quality portfolio. I do think this company is a quality company. Have always been a fan of this company, and I think the market is completely underestimating how much this company is going to grow over the next 5 years. They made really astute acquisitions in the last 3 years. Unlike what's the other companies? Flight Centre. Unlike Webjet, this company did not have to highly dilute their shareholders. In fact, these astute acquisitions, I wouldn't say were on the cheap, but they are going to significantly benefit this company. In fact, this company should be twice as big in 5 years than what it is now. And I don't think the market realizes that just yet. I have heard a few commentators mention this. In fact, I think it was InvestSmart. Was it InvestSmart? No. What's that investing group? I can tell you right now. For some reason, sometimes my memory just goes. Team Invest, InvestSmart, Team Invest. Wasn't Howard Coleman, it was Mark Morland. One of them just said exactly this, exactly what I'm thinking, that this company in 5 years should be significantly bigger because of the acquisitions they have made, which is it's kind of anyway. So I'm bullish on this company over the next 5 years, and that's why I just bought into this company. I'm just going to hold it. And when you look at the weekly chart, just doing nothing, daily chart not doing anything. And again, I've mentioned at this video that companies in my high quality portfolio, I don't really care about the chart. It's they're high quality, and I think they're going to be bigger in 5 years. And the only way I'd look at the chart is if I see the share price fall to a level where I go, wow, this company is really good value. And I think corporate travel management is nearly at that point right now. Now, PE ratio is only 21.8. For a company that I think will be twice as big in 5 years, that means this company could be looking cheap right now. Now, they did have a profit downgrade in the half yearly. That's why the share price fell. But I think that, again, the market is overstating. They even mentioned in their commentary they are being conservative with this profit upgrade. So there is potential they might have profit upgrades. Did I say profit downgrade? They have a profit downgrade. They could have profit upgrades in the next few months because they're being conservative. I love management teams that are conservative when they issue any sort of guidance. Anyway, so I'm very bullish with corporate travel management. I think this is much better company than Webjet, much better than Flight Centre, who highly diluted their shareholders. If you look at Webjet, this is just weird to me. Look at Webjet. They've got way more than double the shares on issue. Share price is now at 8.48. Chart actually looks pretty good, by the way. But if you look at the weekly chart, people are going, well, the share price has still a lot to run because the share price was significantly higher pre-COVID. Well, it's significantly higher pre-COVID because there's way more than double the shares on issue. So the valuation right now is higher than it was pre-COVID, and a lot of investors don't know or don't realize that. Don't realize that at all. I think the same is true with Flight Centre, and we can see that just by going to Webjet. And I'm pretty sure somewhere here they're going to have shares on issue. Yep, shares outstanding. Let's have a look. We'll just put it on the chart. Here it is. These are shares on issue for Webjet. 135 million in 2019, up to 338 million in 2020, and it's increased even further. So in fact, it's almost triple shares on issue. Almost triple shares on issue. But people are saying, well, share price still has a bit to run and recover because share price is only $8 before pre-COVID. It was upwards of $12. It's more to run. And look at corporate travel management. Nowhere near pre-COVID levels. Yeah. And again, look at corporate travel, same thing, shares on issue, and you won't see an increase. There might have been a slight increase because of acquisitions. That's no, corporate travel. So there has been an increase, but I think some of this increase has been because of acquisition. But otherwise, no increase in shares because of COVID-19, no massive dilution to shareholders. So that's another reason why I'm really highly bullish on corporate travel is because of acquisitions they did in the past, which I don't think the market realizes how beneficial it is going to be for the company. Okay, so thank you, David. I can't wait for the April 5 rundown. Might be more interesting. It looked like it was going to be interesting, and then the market didn't do what I thought it was going to do. Hi, Kneppy, with the impressive success of your technical portfolio, I love a video on how you trade technically, how you define a breakout, and why that definition, what metrics you use. I can do that. How I define a breakout. I try to mention this. I have rules. I'm redefining my rules all the time, but I can definitely do that because I use a few. I'm pretty sure I mention this all the time, but I can definitely do a video on that. Maybe I should. Okay, and the last video, 5th of April. Let's have a look at some of your comments. Hi, mate. Can you please give me your opinion on the charts of Universal Stores and Cettire? I bought Universal at 465 and think of selling at 590. Cettire will rise again. So I've already done Cettire, so I don't have to. Ooh, 280. Okay. What did I say? 280? What did I say? So I don't know if we're on the same wavelength. What did I say about Cettire? Their uptrend, go back to the daily chart. So I said the uptrend was about 280 right now. So I wonder if we're on the same length. Me, Panda, Magic Hero. So he's looking for an entry at 280. There you go. Anyway, what's the other company? Universal. This Universal store looks really good. It's a really nice looking chart. It broke. I should have bought this company at about 460. Well, between 450 and 460, like Panda Magic Hero, this was an obvious buy, an obvious breakout for the previous comment, or obvious breakout in my opinion. And this had all the signals going for me. I just missed it, and I missed it over the next 5 days. And it's just done exactly what I thought it would do. And even yesterday, when the overall market was down, share price of Universal Stores up 1.67%, up to $5.50. So he says he's going to sell at 590. 590. I can sort of see why 590, and it's so that zone is those highs we saw back in 2023. So there's going to be resistance in this area. I can definitely see that. But if the share price gets above $6, we'll say 620, there's just blue sky ahead for Universal Store, because the last time the share price would be above that level was way back at the start of 2022. So looking at a 2-year high. Now, even at these levels, share price of Universal Stores is at least a 6-month high, even a 1-year high, and you're going to have less resistance because a lot of the shareholders who bought back in January 2023, when the share price got to these high levels, they probably have already sold out. A lot of them have already sold out of this dog stock. So don't forget, a lot of shareholders, a lot of investors, when they buy, expect the share price to go higher immediately. And when the share price does this, pause, they think automatically the company is a dog stock and I've got to get out straight away. Or I've got to get out when the share price gets back up to the level I bought in. And that's why I look for consolidation periods, because when the share price goes sideways, those shareholders get bored. They go, share price is not rising. I'm just going to get out, take my loss. And that's why a long consolidation period is really healthy when the share price has gone through a long downward period. But this is sort of a turnaround story for Universal Stores. Share price in an uptrend. You can definitely see why you might think about selling at 590. Would I necessarily sell at 590? No, I just want to see what happens when the share price gets above about 570 into that resistance zone. If the share price just moves right through that, that's a really good sign. But I wouldn't be surprised to see a bit of weakness in that area. Okay, for a freestyle session, that's pretty strong going. How you keep so many companies in your head is a marvel. It's just experience, I think. I think it's just experience. I think it's just doing this every day for 15 years. I just know what some of these companies do. I don't know. Great content as always. Thank you. And the opposite is a big bit snappy. And your thought, what does that mean? Oh, okay. Snappy was Kneppy. The opposite is a big bit. Oh, okay. That was the little bit. What's the opposite of a little bit? Big bit. Okay, thank you. That right over my head. Big bit snappy. Okay, autocorrect. I understand autocorrect. Yep. And your thoughts on Clinuvel? Clinuvel appreciate increased volume. Yes, I've already mentioned Clinuvel, so I don't actually have to answer that. We've mentioned the increased volume. So thank you, Ryan Mott. Answered your question. I'm going to write here. Answered your question previously. Well, you might see this answer before I answer a question earlier in answers and replies video released later on Saturday. Don't know why I'm still recording this. 6th of April. Because that's it for today's video. If you have any questions for my answers and replies video for next week, leave it in this video. Now, I am working Thursday, Friday, Saturday night, Sunday, so I still should be able to do a video on Saturday. Those ASX rundown videos on Thursday and Friday. Well, Thursday I'll be working from home. Friday we'll be working in the office. So the Friday one will be shorter and they will be released quite late. So look out for those videos later in the week. Also, I plan to release a few other videos, an Aroa surgery, biosurgery video, and also grade my trade video on Atlas pearls. That's all for this video. Have a good day. Bye. And don't forget, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.